To build anything that truly lasts, it takes time.
Started with global market update then, and US markets were shut on Friday, but a lot of action we have seen on the tariff war front.
Absolutely, Ashisha. Very good morning to you. Well, it's July 7th, and we're entering a very important week when it comes to action in the US. Now, global investors are trading very cautiously as the clock ticks down, to that key July 9th tariff deadline set by US President Donald Trump. It's a milestone that could shape trade flows and market sentiment worldwide. Now, Trump's Liberation Day tariffs are back in focus with that 90-day pause he announced in April set to expire this Wednesday. Now, tariff levels and their effective dates remain moving targets. Now, Trump has floated duties as high as 70%, a sharp escalation from the initial 10 to 50% range. Now, according to the White House, letters outlining new tariff rates will be sent to 12 countries starting today. Now, investors are bracing for more clarity on these and potentially more confusion as well in the days ahead. Now, Wall Street, if you look at the movements last week, the S&P 500, it ended the week 1.7% higher. The NASDAQ Composite, it also ended more than 1.5% higher, whereas the Dow Jones, that ended more than 2% higher the past week. Now, it's coming off that winning week with the S&P 500 and NASDAQ closing at all-time highs on Friday, in part because of the confidence that the Trump administration will implement the most severe tariffs it announced back in April. Now, in the recent days, the White House had called the July trade deadline not very critical. However, markets also digested a second major policy shift late last week. Now, Trump's sweeping tax and spending package is now signed and made into a law. Now, while the Wall Street did rally with the S&P 500 and NASDAQ hitting records, bond markets, they were on the edge. Whereas the US dollar, it lost some of its safe haven shine, down over 6% since April and tracking its first half performance in more than 50 years. But Ashisha, how are things looking on the crude front with that OPEC Plus meeting over the weekend?
Well, yes, lots of developments coming in from the oil market as well. In fact, oil is sitting with a cut of nearly 1 to 1.5% in trade today, and this is the third consecutive day of a decline that we are seeing in the oil market. It is now trading at that $67.5 per barrel mark, and as you rightly mentioned, it's on account of the OPEC Plus decision that came in over the weekend. Now, remember, there were expectations that OPEC Plus could go ahead and increase output by 411,000 barrels per day, but the actual decision has come in much higher than what the street was working with. They've announced an output hike of 550,000 barrels per day. This will be done in the month of August, and this will be the fifth consecutive month of output hike that has been announced by OPEC Plus, much higher than what the street was working with, and that is exactly the reason why oil market continue to remain under pressure today. Now, remember, this is a scheme. This is a part of larger scheme of things where OPEC Plus had announced output cut during COVID and later in 2023, and now they've begun unwinding of that output cut, which means they're hiking their supply. They started in the month of April by about 135,000 barrels per day, went on to increase their output by 411,000 barrels per day for the months of May, June and July. And now for August, they have announced 5.5 million barrels per day output hike. Now, remember, delegates are suggesting, and this is an agency-based report, that perhaps OPEC Plus could consider similar amount of output hike for the month of September as well, that is 550,000 barrels per day. And if at all this were to go through, then supply is likely to increase in the global market, which will again put pressure on oil prices at a time when tariff is already a concern for global oil demand. So several factors playing out in the oil market. In fact, Goldman Sachs has come out with a report where they are saying that they are maintaining their crude price target at 59 barrels per day for the fourth quarter of calendar year 2025, and they say that Brent crude prices could fall to $56 per barrel in 2026. So that's the kind of decline that global brokerage houses are expecting on the oil market. So yes, Kanishka, lots of things happening in the oil market, although currently it is sitting with a cut of nearly 1 to 1.5%.